Hey traders, this is Blake Morrow. You were listening to the Daily Roundup webinar. Hope everybody's doing all right. Well, there was a topic. Oh shoot, where's my forget it. I was gonna look for my no, hold on. Okay. I had to grab my glasses really quick just because I stare at these screens too long and my eyes start to go wonky. I don't know about you guys, but that's what happens with me. We were just having there was a conversation going on in the chat room, and I want to talk a little bit about it really quick, about flexibility in your trading and sizing. Really, it's important. Size does matter. I know, ladies, don't chuckle. Stop chuckling. I actually right now I see you all laughing, like at this moment, like you're all laughing and you're like chuckling, right? I mean hold on. Hold on. You're laughing. Stop laughing. I don't know if you can you even see me? Sorry. I was just kind of setting up in my chair a little bit. I'm polishing my glass lenses because these are I don't normally wear glasses, although I do wear readers. I wear readers. I think when I turned about 40, about 10 years ago or so, I was sitting in an airplane, and I went to look at the menu. And you're sitting. I was just like, well, I wasn't first class. I was just sitting there in the regular cabin, and I'm like, huh. I had to pull everything away. That's when I realized I needed readers. But I wear these anti-glare computer glasses, and they're inexpensive. They're like $30 or whatever, but they definitely work well. I get a headache if I stare at my screens too long without them. So, but we were having a conversation regarding size and trading. Raj says, but good things come in small packages. And it's not the size of the ocean, it's the wave. Wait, is that right? I forget what. Anyway, sorry. Let's get off that conversation. So, we were having this conversation, or there was a conversation going on in this in the chat room about sizing and about position sizing. One of the benefits to me, it's the motion of the ocean. Thanks, Dimmy. See, you're the one that said it. I didn't say it. I haven't had to say it. You had to say it. I'm just kidding. Going back to our conversation about size, because when you're trading, one of the things that's been beneficial for me for the last few weeks is like being able to take a position in the market and just kind of sitting in it and not really worrying about it, as long as I got the direction right. If I and it's really good for traders like myself that I tend to be more counter trend. Like most of you guys and gals, it's like you try to fade a move. You think it's a little overbought or a little oversold, or let me turn this. Hold on, let me turn CNBC off really quick. Sorry. So when you think something's a little overbought or a little oversold, and you're trying to fade a move, like most people, my timing isn't always the best, especially if I'm just trying to leg into a position. Like for example, I'm long dollar Canadian, and I like the fact, and let me pull up the chart really quick. I'm long dollar Canadian. I like the fact that it's holding up really well, considering, hold on, let me fix that chart. Considering that stocks have gone pretty much straight up, right? So if stocks are going straight up, and I know the relationship is, stocks down, dollar Canadian up, or vice versa, I don't mind sitting in this position, especially knowing that the lows below 125 probably aren't going to be touched again. That doesn't mean that we won't go revisit those areas, especially if, like, let's say the S&P goes to 4,000. I mean, the dollar Canadian probably will go down. But if I'm trading reasonable size, I can sit in that and wait as I'm looking for it to go, in my direction. I got an email from Clyde, and Clyde, I'm not gonna call you out in your in the chat room and your what your avatar is or anything like that. But Clyde sent me an email, goes, hey, thanks, Blake. I appreciate you, taking a longer term approach to the market and, helping me sit through some of these trades. And that's the easier part for me now that I'm not trading ridiculous size. Like when I'm trading, if I'm trading like, 2 million of the dollar Canadian, for example, it makes me nervous because if I'm trading 2 million long dollar CAD, just a 2 lot, and the thing drops down to 125 from where we're currently at, I mean, that's 30 grand, boom, And so, of course I'm going to be nervous. I'm going to be, kind of, all weirded out. But, if I'm trading 100,000 or 200,000 and it drops down to, 125 and I lose $1,000 or $1,500, it doesn't freak me out as much in here. And I'm not saying that it's right or wrong. It's just the perception is, for me, it's easier to stomach that. And that's why I'll sit in things. I'll get into a trade and I'll be like, all right, like I've been short the euro yen for 2 days. I'm down 16 pips in a very small position. I don't even think about it right now. It's more of a kind of like, oh, it's in my position, so I can actually focus a little bit on it and just look at it from time to time. I call it a marker. So for me, if I have a marker on something, then that's usually a smaller position than I normally would take. That's me just kind of keeping an eye on it. So that's one of the things that I wanted to talk about today. And you have to find what your comfort zone is. My comfort zone might be completely different than yours. If you're trading a $5,000 account, you're probably trading, mini lots, which is fine, 100% fine. But you got to find like, okay, instead of trading 10 of those, maybe I only need to trade 3 of those, and if it swings against me and I'm down 20 or 30 bucks, it's not that big of a deal. And if it goes in my direction, I make 50 or 100 bucks. And, and at the end of the month, I'm looking to make like, $1,000 or $500, whatever the case may be. But you have to figure out what's the right number for you, because I don't have that. Because I'm not you, and I don't know what your pain thresholds are. I don't know what your risk thresholds are. And that's part of experience, just experience in the markets and kind of figuring it out. But the one thing I can always say to you is always start small as you can, and then work your way to wherever your comfort zone is. Always. Becky asks, is it possible that you could have an auto alert for this session through FA that lets you guys know that there's that the webinar is on? She says sometimes she forgets. Yeah, you know what, Becky? Thank you for mentioning that. I'm gonna make sure we get that done. We need to get one for Daily Roundup and probably European crossover, although I'm never awake during those periods of time, and that's so. Anyway, all right. Let's talk about the markets and where we're at currently. You don't need to see me anymore, so I'm going to take the video off. Okay. So the S&P is right up against resistance. I think this is pretty key resistance. I was looking at the charts. I mean, this is an hourly, you can see an hourly trend line or 4-hour trend line. We're pushing right up against triangle resistance. I do think we're in the middle of a triangle, but that doesn't mean that we can't press higher. You just have to be kind of careful around here. The markets, I mean, you know, let's look at the Nasdaq. The Nasdaq's up 4% today. Yeah, and we're running right into the resistance zone. So you'll notice that this whole area, this whole zone is really the resistance zone for the Nasdaq. The reason why it might come all the way up here, you got some spike highs, you got these lows, minus candles, you know. So this is all into the resistance zone. And matter of fact, take the last move, we're at a 50% retracement. We're probably fairly close to a 38% retracement, not too far away. So 38% retracement of the NASDAQ 100 is maybe another, was that another 100 points? So the NASDAQ's getting close to, well, actually, I'll leave that there. I think the NASDAQ's getting close to some resistance intraday. So the reason why I hope it finds resistance here is that the S&P will stop here then, and then the Dow will, you know, stop again at these all-time highs. We are trading at intraday, you know, almost intraday all-time highs again. So where we close is going to be important for the Dow. But remember the Dow, oh, if you guys missed it, it's this bull flag pattern from yesterday actually points to 32,500. Sorry, I just had to cough really quick. So as far as currencies go, let's talk a little bit about that. You know, the euro is stronger, it's bounced, but I'm gonna say that currencies really haven't done a whole lot. They really haven't. I mean, they did majority of their moves in European and Asian trade. I mean, the euro's up a little bit. I still think we can get up to 119.50. The cable, you know, struggling with this downtrend line. We tried to pop our head above it, and we're kind of, you know, struggling there. The Aussie, you know, we're around these highs. I still think we can get up to the 77.65 level. I think it's entirely possible. But, you know, if risk turns lower, then the Aussie is going to turn lower. And then that's going to be kind of bearish because, you know, when you take the Aussie and you take the Kiwi and their bounces are so shallow, that's not a good sign, right? It typically is not. And then you look at like the dollar Canadian, the dollar Canadian is basically flat on the day. I mean, you wouldn't expect that in a day where the NASDAQ's up 4%, right? US dollar Norwegian krona. I mean, it's down, but we're holding the 618 retracement. We're holding support. The dollar Mexican peso, it's down 1%. You'd expect that. But look, the dollar Mexican peso is still above its 200-day moving average. Any move back down to 21, let's just call it 21.10, but really down to 21.15 might actually find support. And then if you think about it, if these commodity currencies don't do anything and the S&P does turn from 3,900, we should see some weakness in the commodity currencies going into tomorrow. Now, that is not guaranteed. That's not guaranteed, but that is something that, you know, I think is entirely possible based on the price action that we've seen today. One of the other things that I need to point out here is crude oil. Here's crude. Crude's weak. You know, I know it's been really strong, but we're right at support here. So if crude starts to break below the 6,400, maybe, you know, that is a catalyst that drives the Canadian, maybe Norway a little lower. Copper, I mean, copper is weak. Now they've led this whole move and risk higher, but copper and crude are just kind of languishing a little bit. And that's, again, that's not what you would expect on a day like today when equities are so much stronger. Got a couple comments that came in, and let me see here. Alexander said, were you able to fix the printing issue? Yeah, I had to have my wife. She uses a MacBook Pro. You know, she's always been a Mac user. And she normally doesn't print from our home computer. because she goes to her office to do that. So I had to have her cancel and blah, 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 all this stuff. Lorraine said, I'm a bad boy. Oh, bad boy. Alexander says size on trading does matter. Ha ha ha. Alan says, hence we always talk in pips, not dollars. Yeah, and that's right. I do try to talk in pips and not dollars. But also, I have to say that my trading, I'm a lot easier. Like the stress level is about 10 octaves lower now in my trading without trading size. Now, of course, if like last week when I shorted the Aussie last week and I shorted it from like 79 cents and it dropped down to like 77 and change, I crushed it in my account. If I was trading size, I would have crushed it and then some, you know what I mean? So of course there's that, but whatever. Dimitri asks, the euro pound wedging 60-minute may be a good long here. Let's take a look at the euro pound. I'm a little worried about the euro sterling. Hold on really quick. Okay. Now, when you say wedging, if you're probably looking at an hourly, you might be looking at this then. Could be a decent long, maybe as long as we stay above that spike low. If we break back above here, I'll put an alert on this trend line here. If we break back above there, might be a decent long. But the one thing I have really big issues with right now is we're below this multi-year trend line in the euro sterling. That's the thing that worries me the most at this point. Daily RSI is oversold, so we'll see. So anyway, today I've been fairly inactive. I traded a little bit of short of the dollar yen. I didn't stay in it as long as I should have. I think I'm nervous about yields. I'm nervous that everybody is going long in the bond market or shorting yields. Everybody thinks that yields are going to stop here. David Tepper was on CNBC yesterday. He had a conversation with Joe Kernan, and then he said he thinks that bonds are going to bottom here and yields are going to come down. I think everybody's jumping in that trade right now, and I'm not really convinced that that's the trade. Now, the dollar yen has come down. I should have stayed a little bit more patient. I got out here at the like 70 level, like 75, I think. I shorted it last night up here and I covered it here. It was small, it wasn't big, but yeah, I'm not 100% convinced that yields are going lower at this point. And if they do, why are they going lower? Are they going lower because people start to think there's risk off and maybe there's a safe haven yield or safe haven bid in the bond market? I don't know, but there's an auction coming up here in the next 10, 12 minutes. We'll see how that pans out and see if there's because it's short-term paper. I think it's a 2-year or 3-year or 5-year. So it's some short maturity. Obviously if there's a big take up in that. Craig says it's 3-year. There's a big take up in that. That could move the lower end lower a little bit in yields, but we'll see. And then you can interpret that however you want. I mean, if short-term bonds are being scooped up, maybe that gives us a little bit of a risk off swoosh. Who knows? Anyway, watch the S&P here. I think the S&P is going to be this is the driver right now for me. So let's watch that S&P at resistance, see how we react up here. If we for some reason get back below 3880, then that would suggest that we are turning back lower into this triangle. And then you can think risk off. What does that mean to you? Well, buy the dollar Mexican peso, buy the dollar Canadian, something like that. All right. Gavin says Tepper's comments regarding bonds, hence the bounce in tech today from what some believe. Yeah, I mean, that's the way people are interpreting it. And, he is one of those very influential people. He is. It's amazing. It's amazing. It's kind of scary that some people are so influential like that are not, you know, from the Fed. It's freaky, isn't it? All right, guys. Hey, I hope you all have a great day, and thank you all for hanging out with me. Like I said, I'm kind of quiet right now as far as trading goes. Like to see what happens here. Dow's turning lower a little bit, but the dollar is just kind of hanging in there. So we'll talk to you soon, and thank you everybody for tuning in. Have a great day. See you later.